The Nasdaq just led the market lower for a third straight losing session, and this time the bond market did the damage. At the time this video was made, the Nasdaq Composite dropped 1.33% to 26,289.71. The S&P 500 fell 0.69% to 7,691.76, and the Dow slipped 0.22% to 53,343.40. The trigger came from the global bond market. Sovereign bond yields reached multi-decade highs, and that spooked equity investors. Japan's long-term government bond yield hit its highest level in 3 decades. Germany and France saw their long-term yields at highs not seen in over a decade. Rising yields give investors a risk-free alternative to stocks, and that dynamic slammed the growth-heavy tech sector. For months, traders ignored the bond market and chased artificial intelligence. Today, the trade finally fractured. The board was red across every major index. The S&P 500 lost 0.69%. The Nasdaq Composite fell 1.33%. The Dow gave up 0.22%. The Russell 2000 dropped 1.30%. And the VIX jumped 4.28% to 15.84 as traders repositioned away from growth. Semiconductors took the heaviest fire. Western Digital, Marvell Technology, and Seagate Technology all suffered heavy losses as traders dumped chip shares. Technology was the worst sector in the market, down 2.47% on the day. Risk-free just became real competition. The split tells the story. Technology fell 2.47% and industrials dropped 1.48%, while energy gained 1.76%. Healthcare added 1.60%, consumer staples rose 1.06%, and financials edged up 0.45%. That is a textbook defensive rotation. The damage runs deeper than one session. The 10-year Treasury finished at 4.706%, and the 30-year at 5.285%, still historically elevated. That sell-off in long-term government debt pushed mortgage rates higher. And the massive borrowing behind AI data centers is now competing directly with government bonds for investor capital. Washington is complicating the picture too. Under Chairman Kevin Warsh, the Federal Reserve has curtailed its signals about future rate moves, forcing traders to react directly to economic data. Warsh created 5 task forces to review how the central bank does business, and the government deficit just posted its largest monthly reading since March 2021. So here is the question that matters. What happens when the highest real rates in 2 decades meet a market priced for an AI boom? 3 signals confirm the stress. Gold fell 0.57% to $4,392.60 because high yields raised the cost of holding it. Crude oil sits near $84.21 a barrel with Middle East supply constrained. And volatility is climbing, with the VIX up 4.28% on the session. What matters next? 1. Watch the 30-year Treasury at 5.285%. 2. Watch Japan, where long yields just hit 3-decade highs. 3. Watch the energy complex, because stalled Iran talks mean crude spikes remain a meaningful possibility. And 4. Watch the semis, whether Western Digital, Marvell, and Seagate can stabilize. At the time this video was made, 5.285% on the 30-year is the line. If global yields keep marching higher, growth stocks could face another difficult session. If they cool, this rotation gets room to breathe. Markets like this are exactly why a plan matters. At startwithtA.com, you get daily market briefings, real trade setups, and the levels that matter before the crowd sees them. Start your journey at startwithtA.com. The link is below. That's the briefing. Subscribe for daily market analysis from the Traders Agency team. This is education, not financial advice. Trade smart.